All right, let's talk about the cost of a convertible note fundraising round. Hi, everyone. Thanks so much for joining me today. It's been a little bit quiet on my end for the last month or so. I'm actually going through some reorganization of businesses and actually some what I would call, or Matthew McConaughey in his latest book, Green Lights, would call some unbranding. So I'm actually switching some things up, and you'll probably see that starting in the first of the year. If you've been around me for a while, you probably remember that each winter and summer, I take a hustle hiatus or a break from hustling. Basically, I take some extended time off. And so that usually starts November 15th, which is coming up in about 10 days, and it runs for 2 full months past the new year, all the way into January 15th. And then I do it again coming up in the summer, right around May through July. So going to have less content from me for a while. I hope you'll bear with me and stick around, because coming back in January, going to have some good content and probably a little bit different content, less focused on startups and a little bit more on the financial aspects of life, but still some startup and entrepreneurship content as well. So just going to see some changes coming up. So I hope you bear with me. Today, I wanted to talk to you about something I've been researching. So I've been doing some trades and some investing. And I recently purchased some stocks in 3 different Chinese electronic vehicle makers. They were recommended to me by a friend. So thanks, Stephen, for the recommendations, by the way. Yesterday is actually when I bought into them, and I bought them pre-market. And when they opened, they all opened up anywhere between 5 and 20% by the end of the day. So it was a great day for trades. I'm still holding them because we're about 20 minutes from the market opening, and they're looking like they're going to be up another, or at least one key one is going to be up another 10% today. So I'm feeling pretty good about those stocks and some of the trading that I've been doing. But what I want to share with you today is, as I was researching these stocks, as you should do before you purchase any stocks, is I was taking a look at one in particular, and I was looking at their quarterly statement to kind of get a sense of the company. I was very intrigued to see if the Chinese government was a shareholder in the company, because that might influence my purchase decision. And as I was reading it, I noted that they had done some fundraising via a convertible note. And so they actually, in the quarterly announcement, talked about the cost of that convertible note. And so I have talked about convertible notes in the past. I've talked about them. Actually, I think one of my top 3 most favorite or popular videos on YouTube is about the idea of a SAFE agreement, a simple agreement for future equity, which was created by Y Combinator, and it talks about convertible notes and how they work. So I'm going to reiterate that here, and then I'm going to show you what I mean by the cost of convertible notes by going to that quarterly statement from one of the companies that I invested in and showing you exactly what they're talking about, this premium that they're paying for the convertible note. So a convertible note is a great fundraising vehicle, particularly for a pre-revenue company, because one of the key tenets of a convertible note is that it sort of punts or kicks the valuation of that business down the road. When you're a pre-revenue startup, it's really hard for investors and even yourself to put a good valuation on the business model. It's just not easy to do. So a convertible note allows you to go ahead and fundraise, but then push the valuation down the line. And so the way a convertible note works is you are getting an investment from an investor or investors, but it is the ability for that investor to turn that note, essentially a loan, into equity down the line. Now, why would an investor do that? An investor might like doing this because they get to anticipate some payback. And I'm going to show you how this worked for this company I'm talking about. They anticipate a payback through this premium, or this interest, you might call it, if you're familiar with loan terms. But then if the business is doing well in the future, the investor can then convert that into shares in the company. They release their right to payment through interest, essentially, or the premium, and they turn that investment into shares. And they would do that if the company is doing really well and is accomplishing some milestones. And in this case, this company is doing pretty well. Their stock price continues to rise, even though they're pre-revenue. They've got a lot of backing. They just had some recent results where I think they sold 3,500 cars in a quarter, which was a really good number for them since they're newer than the likes of Tesla and things like that. So what I'm going to do now is switch over real quick, and I'm going to show you this quarterly report and then show you the cost of this convertible note to this company. And that will give you a sense of what these premiums look like on convertible notes while you're still in this loan type period. Okay, you should be able to see this quarterly report I keep talking about. The company I've been alluding to is a company called, I'm not sure how they pronounce it, NIO. It's NIO. That's their ticker symbol as well. And by the way, as always, I will admit I have purchased shares in this company, but any investment decision you make should be your own, and you should consult a qualified financial advisor before you do that. But I have bought some shares in this company and two others. This is not the one that was up 20% the day I bought it and then 10% today, but it is up, I think, 5% yesterday and another 5% expected today. So it's doing really well. It is one of the larger ones, and this one is one that has fundraised from the Chinese government. I think it was about $1 billion. And in accepting that $1 billion, they gave it some concessions. They agreed to manufacture in Chinese and stay in China, stay in China long term, and some other concessions. But as I was reading through this quarterly report, I realized that they have basically raised money through a convertible note, and you can see it right here on my screen. I'm going to highlight it for you. It's not coming up really bright, and it makes it hard to read. So I'm going to highlight it for a second. I'm going to make it go away. It's on page 2 of their report. You can get this report on their website, but here you'll see what it says is each affiliate of Tencent Holdings, which if you don't know Chinese companies, Tencent is what I call the Apple of China. And Mr. Ben Lee, who was one of the founders of this company, our chairman and board of directors, chief executive officer, subscribed for 100 million principal amount of the affiliate notes, each in 2 equally split tranches. So meaning that it's 50 million here, 50 million here. And I imagine that those tranches, the second tranche, the second round of that 100 million only kicks in after the company has crossed certain milestones. The affiliate notes issued in the first tranche will mature in 360 days, so 1 year. They bear no interest. So if you notice, earlier in the video, I was telling you that think of it like interest, because that is an easy way for people to think of a convertible note. It has an amount, a premium that the company, the startup, pays to the investor. So it's sort of like an interest. It just doesn't accrue in the same way. You're not making monthly payments, that kind of thing. It's essentially like a balloon note where at the end of these 360 days, this company will owe, you can see it right here in the middle, require us, the company, to pay a premium at 2% of the principal amount at maturity. Now, what all that means is that they borrowed the first tranche, which is $50 million at 2%. So I don't know how good my math is today, but $50 million at 2% is probably what? $1 million in interest or a premium, I would think. And so what happens is notice it says at maturity. So after 360 days, the company is going to owe 2% of the balance of this convertible note. Now, if the company has been able to make some money and make principal reductions on that original tranche of $50 million, then they would pay 2% of that outstanding balance. So let's say they're having a good year, or they have excessive cash for some reason, and they want to pay down this amount. I don't see it in here where there's no prepayments allowed. So I imagine that they could pay, 10 million into this 50, then they would owe 40 of the first tranche. And so 2% of that would be $800,000 if my math is good. So my point is, these convertible notes that are essentially like a loan and have a payment, a premium due for this company. As an example, you'll see that they paid they're going to pay 2% during this first year on this first tranche. So that gives you an idea of what a cost to you would be if you did a convertible note with investors as well. Now, let's keep reading. The affiliate notes issued in the second tranche, the other $50 million, will mature in 3 years. So they've got a longer window to pay this premium. They won't bear interest, and they require us to pay a premium at, you can see it right here, 6%. So this extra 50 million is at 6%. Now, why is it so much higher than 2%? Well, because by extending another $50 million, these investors are taking on more risk, and the money goes out 3 years instead of 1 year, right? So it's more risk. The longer your payback period on anything, the more risk there is to the investors, and therefore, they want an extra premium on top of that. So the first tranche at 50 million for this company is at 2% premium, 6% on the second tranche. Now, here's the convertible part. The 360-day notes will be convertible into Class A shares at a conversion price of $2.98. Okay, $2.98 per share. Now, think about what that means for these investors. Right now, I don't have it exactly memorized, but I tell you what, if you'll bear with me, I'll flip it open and tell you exactly what this stock is sitting at right now. So this stock, NIO, is sitting at a price of $38.69. These investors can convert this note into shares in the company at $2.98. Let's call it $3 versus the almost $39 this share is worth. That's a really good return for them. So if they are feeling really comfortable about the progress of the company, maybe even they just like the value that the stock price is sitting at, all kinds of factors, these investors can then waive this 2 and 6% premium that they should be getting and turn around and convert that note, that 50 million or 100 million if they take the second tranche, into shares of the company at $2.98 per share. So I'm hoping, having used a real life example, that this gives you a bit of a better idea about how convertible notes work and what you might expect to pay on a convertible note. So that 2 and 6%, 2% money is a pretty cheap, let's call it, again, just for the sake of ease, interest rate, right, on a loan, essentially. And so, that's pretty cheap money for them to raise. 6% on the second tranche of money. Again, convertible notes are like loans essentially, and so they carry interest. You may see, higher than that, but with market rates not being a lot higher, I am seeing other types of fundraising, particularly lending, fall at inexpensive rates right now. So somewhere between 2 and 6% is not unbearable. Of course, on $50 million, 6% is going to be a pretty hefty check to write, not counting paying down the principal. So again, convertible notes, popular way to raise money, allowing you to push the valuation to a later date. I didn't note in here when this started, but it makes sense to me that this was done probably years ago when the company was just getting started. And that's why you see the discrepancy between the $3 in stock price and almost $39 today. So I hope that clears it up at least a little bit more about how a convertible note works and what you would expect the cost to be. Again, look for me to take a pretty big hiatus coming up so that I can recharge and refocus. But until next time, I hope you find your voice. Have a great day.